Check, check. Quick sound check. Can everybody hear us loud and clear? What is going on, Coach Paul?
Hey, thank God it's Friday. Well,
It
maybe
is
not if
Friday.
you've been short. Maybe
Right.
you want this to continue.
We're
But
going.
how you doing today, Coach Jay?
Doing good, Coach. Doing good. How are you today?
Uh, Looking forward to a restful weekend after this. I
Absolutely.
feel like I've been on one of those water slides at a water park or on a cruise boat. There's a
Seriously.
fierce and straight down.
Straight down. Welcome everyone to At the Buzz Hour Market Recap. If this is your first time here, the goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. If this is our first time meeting, I'm Coach Jay. Been a top step performance coach since June of 2023. Been trading for the past 13 years in the futures markets for the past 6, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some experiences, some wisdom, and perhaps help you become a better trader.
Awesome stuff. Thank you for that, Paul. You are all our chat, our audience. Thank you for joining us, even on a Friday after a very long week. Let us know how you did this week. I just want to be the first to say if you have not traded in an environment like this before, some people haven't, right? You'd have to be trading for at least 5 years to have been in an environment like this. So if you're struggling with trading right now, just understand that these are environments that happen every once in a while, and we do have to get adjusted to them. It's okay, and Dakota's been saying it on Topstep TV. Trading is optional. It's okay to just watch right now and and not have to try to figure out how to make money out of this. But with that being said, there's also a ton of opportunity. As traders, we look for days like this. You know, as a trader, right? What it means for the economy, what it means for the world economy, that's something different. But as a trader, we look for opportunities like this. So you want to at least get the screen time to try to understand how these markets work. But if you're struggling with this, just understand that you're not the only one. Um, but these can be great environments if we understand how to navigate them.
And the basis of that is knowing your risk management plan.
So,
You could have the greatest trading plan since George Soros. It doesn't do you good if you don't know how to manage your money. You're a money manager, and this is where this environment is. Everything is exacerbated. So, like I said, you don't have to trade, or if you're trading and you're doing well, recognize why you're doing well. Um, and if another thing is, if you survive these kind of markets, you're a good trader.
100%, coach. All right, let's talk about what happened today. We did have some numbers out. Non-farm payroll was the big one that everyone was looking for today. Why are you laughing, Coach?
It's like it was a blip.
It's
Oh,
a blip,
non-farm payrolls. Who cares?
right? And it's funny because it came out great, right? Actual was 228,000. Forecast was 140. Um, the unemployment rate came in at 4.2%. Forecast was 4.1. But that is not what anybody cared about. I think the biggest news was the retaliation and tariffs from China. I think it was an additional 34%. Um, and that happened overnight and started this sell-off, coach. Maybe they were just like, hey, put out some good non-farm numbers to see whether or not that can hold the market up. And it did not do that at all. The markets just continued to sell. And this is serious. This is serious selling that we're seeing coming in here. We've been talking about the markets not holding a bid since February, and it's continuing to do so. We also did have a press conference from Chair Powell today. He did mention briefly, not even briefly, but he kind of talked about the tariffs. But he's not going to give any decisions or anything like that. Um, he did say that with these tariffs they might slow down the progress that we saw in inflation coming down. But anything you got on the news, coach?
Yeah, I was. You mentioned Chair Powell.
Mm,
He there's a. It seems to be there's a little friction going on between him and the White House. I
surprise,
can
surprise.
imagine what goes on behind the scenes, but he did say something goes. Tariffs cause inflation, and the bond market was up two handle to 64 ticks.
Mm,
And they came off hard after he said that. I was surprised. That was kind of a hawkish thing to say, especially when the president told him, "Be a good time to cut rates."
right.
So that there's the bonds, the Treasury market did not react well to that press conference, although it was up for the day.
Mhm.
Um, and it would make sense it's up for the day. We're seeing complete liquidation. Like, I, this is Coach Jay and I had a great conversation in the green room before. Um, I was asking me, like, um, does this remind you of different when there was markets like this before? When COVID, and COVID was a little different because there was so much sudden uncertainty.
Right.
Like, are we all going to die? Um, it was sudden.
Yep.
'08 financial crisis. This reminds me more of that as we make new lows as we speak
As
in
we
the
speak.
S&P.
Still
Um,
trading lower. Nasdaq trading 17,450. We're approaching what that 7% number was in the Nasdaq. S&P is trading 5083. So we are not far off from trading the four handle in the S&Ps. Uh, Pretty crazy here. Uh, Go ahead, coach. Finish that thought.
yeah, well, I'm just saying. So '08, well, in that financial crisis, this, and I think I've said this before, it reminds me, it's got that flavor to it because it's gone on now
Yep.
for a while. It
Yeah.
wasn't sudden, like COVID was sudden and sharp.
Yeah. 3, 4 days of limit down, and then we found a bottom and kind of bounced from there. Um, where this has been happening, and what we've been talking about, coach, is during COVID we still had those limit down days. We haven't seen one of those yet, right? Where this is just orderly selling since mid February, right? It started off kind of slow, and then has just gradually picked up, right, with the ranges expanding. But it's very orderly, right? We're not seeing just a huge drop. It's an orderly sell, and it has been. These ranges are expanding, so maybe we are getting to a point where we see that capitulation move, but it has not happened yet. Um, right, but let's talk about the percentages on the quote board today. We have 35 different markets we can trade with top step accounts, not just the equities. Today, to the downside, we had natural gas down 7.52%, silver down 7.55%, and copper, our biggest percentage mover to the downside, at 9.17%. To the upside, we had the 30-year bonds up 0.81%, ultra bonds up 1.2%, and micro Bitcoin futures, our biggest percentage mover to the upside, at 2.3%. To talk about the big four, we had crude oil down 6.48%, the S&P is down 6.48%, gold down 2.06%, and the Nasdaq down 6.75% right now, continuing to make new lows. We are going to just pull up a shorter time frame chart while we watch this. Uh, just continuing to sell here. Pretty crazy stuff. All right, but let's go through our normal process here, coach. Let's look at a daily chart. We are, uh, at the end of the week. We're on a Friday, so why don't we go out to a weekly? What are you looking at here on this weekly chart, coach?
Well, what's the next level? Is that we're almost hitting the 200 bar moving average on the weekly. Um, I haven't said that many times.
Yep.
Um, what's the last level? I mean, this is crash like stuff.
Hmm.
Look at the volume.
Oh yeah, on the weekly, highest volume we've had on the weekly since 2022, January 2022. This is at the low of this move right now. January, that 2022 high volume was an upward candle. remember, we've been talking about 2022 for a little while now. That was the last bear market that we had. We are in bear market territory right now in the Nasdaq. I'm not sure about the S&Ps. Remember, anything over 20% down is bear market territory. Currently, in the futures, we're down 23%, and continuing to make lows here. But yeah, Coach, I don't know if this 200 moving average is kind of skewed because of this data, but that looks like the next target.
I can look at my
But continuing to
yeah,
sell.
it's about right. And boy, we cannot. So we're getting liquidation as we speak.
Yep. And we've been seeing this, right? We've been seeing this. We've seen a couple of 100-point moves after the close in the Nasdaq, and we're continuing to see that here, right? We're down. We closed at settlement price is going to be somewhere up near 17,508. We're trading 100 points lower than that right now. And we've seen this almost every day this week where the markets continue to sell. Um, and 17,408 right now, the Nasdaq trading. Uh, Pretty close to that 7% level, wherever that is. And just remember, for these limit downs, for these circuit breakers, and JD mentioned this on Topstep TV. After a certain time, I think it's 45 minutes to go in the day. Those limits, the only limit that matters at that point is the 20%, right? So that 7% level, we would not have had a halt if the market continued to sell there. Uh, Anything else you got on the daily or the weekly, Coach? Let's look at what happened today, if we don't.
Oh, wait. There is something on the weekly that I noticed.
Okay.
Let's do a trend line from 2022's lows.
Trend line from 2022's lows.
You do a line chart, and then it's easier to do the trend line when you have a line chart. All right, those lows. There we go.
Interesting.
We're right there.
Right there.
S&Ps and Nasdaq. And you're telling me this officially bear market now, according to
According to the percentages, yeah, officially bear market.
okay, the CMT, the chartered oh man, I'm certified market technicians. It's a 20% is their definition. So we're just started the bear market. And we're on that trend line on a weekly. We've only corrected 20%. And you see, it's kind of funky. We say 20%, it's 20% in price. So from zero to the top.
Right.
This is pretty severe. With this, and it's happened quickly. Look at how long it took. A little longer in 2022 on that break. This has all happened in what, 3 weeks, 4 weeks, 6 weeks,
4 weeks, mid February. So about 6 weeks.
There's newborns that aren't out of the hospital yet. Wow.
Right.
So if this explains the high level of volatility, let's reason this through first principles. For volatility to sustain itself like this and grow, what has to happen at its basis? The price levels or the price ranges have to be extended, and then extended again, and then extended again. So where's it extending? To the downside. It's relentless. So let's look at, starting on the weekly, what's the average? Is that the average true range there?
Average true range on the weekly, 1034 right now, and that's the highest that we've seen it probably ever.
Okay. So the basis of this is a serious liquidation move.
Yep.
It isn't over. We'd have to see that start collapsing. We're not.
With the ATRs, I think also it is extremely high, right? But we also have to think that as and correct me if I'm wrong here, coach, but as the price of the index goes up, then a 1% move in the Nasdaq in 2025 is a way bigger move than a 1% move in the Nasdaq in 2020 or 2021,
Yes.
right? Because just the amount of points that we're looking at.
Right.
But still, big moves nonetheless, especially for future traders, because if a 1% move happens now, it costs a lot more money
Okay.
than it did about 4 years ago.
Now let's look at the ATRs on a daily basis.
555, 55. A lot of fives.
555. It was 400 a week ago.
Right.
That's what, 30% higher. As it goes up, and this is the function, if you haven't gone through a bear market like this is the function. That's why volatility goes up when price goes down, because that's where insurance kicks. It's like an insurance rate. So we had today a range in the Nasdaq of 1,326 points.
Yep. And we're taking a zoomed out view right now, and we're going to get to how we day trade this. But what you just said, coach, is a big thing. 1,326 points, high to low range on the Nasdaq today. All the equity markets had expanded ranges. I think I saw Peter Tuchman say this is the first time since 2020 that all of the major indexes had 5% down days on the same day. First time since COVID. 1,300 point range in the Nasdaq. How many dollars is that?
Well,
It's a
times so
couple.
it's 20. Wow, 220. What?
26,000? Is that right?
$26,000.
Right. With a one lot mini.
Okay. So if you're struggling, and you're still trading the same size, unless you're right, you could even be short or enter a short and get blown out.
Right.
It
Yeah.
doesn't, because the size of the swings that's volatility. So this is a really important lesson, and this is why I want to spend time on you, is understanding the volatility, because you have to trade the amount in your account. So let's go down to the half hour.
Let's take a look at the half an hour. Let's mark out last night's open. This like a blip. Here is last night's 30-minute open there. We already know we're under the 200 moving average, under the 20. We'll get to it, but this is a very nice technical day. But go ahead, coach. Go ahead.
No, you're right. I mean, where's the buying?
Doesn't exist.
Once again, let's remove the bar. It's the same pattern every day. It's not even a stair step. It's like a mountain. Anyway, where's the buying?
Nowhere to be found right now.
But now let's look at the VWAP.
Yep. It's just I got overnight VWAP as this yellow line right here.
Yep.
But let's put these candles back on there.
Oh, let's look at the average true range today in the half hour.
Okay.
Where did it start this morning?
This morning, if we look at New York session open on the half hour, we were at 150 points in a half hour.
And where did we close?
187.
How much is that in a mini?
250 points. 50 points is $1,000. 180.
Times 5.
Yeah, times 5. That's 5,000.
5,500.
Somewhere 5,500. Yeah, 5,500
okay.
with one lot mini.
50. This is a half hour chart. 5,500. That's still on a half hour. On a 1 micro, that's $500.
Yep.
So if you're still trading, if you were trading 3 micros last week, that was down. That was like 20.
Right.
So why I bring this up and magnify that for new traders, two things you can do: stay out. It's just too big of a risk, or you get one trade on a micro. But if you have 5 micros, what is it on the 3 minute?
Yeah, let's keep going down. I do want to mention a couple things, just paying
Mhm.
attention to this overnight VWAP here. This candle right here, this 30-minute candle was the China retaliation. So just paying
Ah,
attention to this area right here. Let's mark this out. All right, on a 3 minute, uh, on a 3 minute during the New York session, 85 points
in 3 minutes.
in 3 minutes.
So almost $1,000.
Yep.
Okay. That's almost in a 3 minute, that's almost $100 on a micro, the smallest amount you can trade. So if you're trading, and you could be trading and following a process, but if you
Right.
don't change your size, your
Yeah.
risk has tripled or quadrupled.
Yep.
And that's how it's really important to understand that when you want to get through this kind of market, you have to adjust your size.
For
And
sure.
if you
If
still can't
you
afford it there, don't don't trade.
if you shorted today and lost money, you're not a bad trader because you tried to get in the flow with the market. You need to adjust your risk management, right? You need to be a better risk manager. I think that's what you're saying right now, coach, because shorting
Yeah.
this is the right idea. And it's something that we talked about in the green room before we got on here. I took a short this morning. I took it on opening call at 18,213. I took that trade in my personal account as well, and I was risking about 400 lots on a one lot mini or one lot micro. Right. I did say I was just like, and we said it in the green room. It's just like, there is a part of me that thinks, hey, you had the trade right. You could have made 50 grand today, right? But at the same time, it's like, what are you actually willing to risk? And if you over leverage, one of these, what look like very small moves to the upside could wipe out an account, right? Because of how increased this volatility is right now, a counter trend move, this candle right here on a 3 minute is 80 points in the opposite direction. If you're over leveraged trying to make this $1 million day, that quick move that, in the grand scheme of things was just a minor pullback, uh, can blow you out of the position before you get to experience any of the profits, right? So I think on days like today where it can be, uh, you know, enticing to try to maximize it, maximizing it in a day like today, coach, I think is just staying in the position for as long as you can, right? And riding that wave instead of trying to force the market to you know give you as much profit as possible.
Well, with that said, that's a very astute point, because you got to, on a day like today, if you didn't get in early,
Hmm.
I mean early, like in the first couple minutes,
Yeah.
first within the first 5 minutes, um, those are, you just said it. Those aren't little moves. The smallest candles are what? How many points? 80.
Yeah.
Okay.
80 points.
Okay. So understand that. I understand it. It. You could have sold 5 this morning, and this is where the faulty reasoning comes in, because you hear about the survivor who did that,
Hmm.
but you don't hear about the other 9 people who blew up.
Nope.
Um, because it's so tempting. And so focusing, you can still, with a couple micros, trading in and out and following a routine with one micro, heck, you could have a $2,000 day. It's relative.
All right. Now we can zoom in just a little bit more. There's a couple of technical patterns that we've talked about that all of the craziness that's happening right now, right? We started out with a weekly chart, which we set the environment. Uh, The markets are selling off, not holding a bid at all on a higher time frame. But we have to make decisions on somewhat of a shorter time frame, right? Even if I'm looking at a 30-minute chart or whatever it is to place an entry, from a technical perspective and some of the technical playbook trades that we talked about, right? On that shorter time frame, okay, great. I know this market is selling off and the opportunity is to the short side, but how do I get in it? What I'm looking at here on these charts is the technical patterns that we talk about when the daily ATR is 200 points or 500 points still apply here, right? We had a 3-minute opening range. We had VWAP leave that range. And now again, these candles they look like, run of the mill candles. This pullback into this opening range is 150 points, right? So you can't take it the same way as if it was a, 250 ATR a day, 250 point ATR a day, because it's a 1,300 point day. But from a technical perspective, the trades still play out. Now, the question is, can I risk having a 100-point stop loss? We saw Barron this morning on Fast Markets. He was trading micros with a 100-point stop loss, and the response is, "Oh, this is crazy. This guy's trading with 100 points." If he traded with anything smaller than it, his trade gets taken out before it has any time or any opportunity to work. So, from a technical perspective, we set this opening range. We tested it a couple of times. We even came back and tested it and tested overnight VWAP again. These are all technical trades, right? We see this New York VWAP continuing to act as a resistance on the way down. So if you're looking for opportunities on how to get in, you have to get in and out for a technical reason, right? If you just say, "Oh, well, it's selling, so I should sell it," and you sell it here, coach, what happens?
Oh, well, it's 180, 200 point move against you, and you eventually are right.
Right.
Now, that's the problem.
Yep.
Um, one of the ways to help is what we talked about, get your position on close to volume, not price.
Yep.
Um, wow, that was really far away. I didn't even notice that.
Yeah. I mean, at this point, at this low, and shout out to Brad, he called it. He's like, nice J trade at the bottom here, where we had some high volume, closed above it,
Yep.
came back, checked it, and you got a 300-point move to the upside at that point. So there are counter trend moves, and I think that's one thing that we need to be aware of as well. Uh, in bear markets, bear market rallies, coach. What are those
Are,
normally like?
are the most vicious things you've ever traded.
Yeah.
It's, I call it the beach ball effect.
Yep.
Something sudden, it's like 5 times.
Right.
Why is that? Well, market is designed to go up.
Right.
But
Short
you know
covering.
what? It's short covering. Is it more even? Is the sell? I think we'll put it, the selling pressure stopped or the selling volume stopped.
Hmm.
As soon as it stopped, they'll find a bid, and that's why it was explained to me one time, and I was like, wow, that makes a lot of sense. It springs suddenly. But how do you catch that?
Right.
You can trade price, and I'm not saying anything against it, but if you have price and you're establishing your price, you still have to do risk management.
Yep. We got some questions in the chat here. Let's get to these. I know we're spending a lot of time on the equities, but most of our traders trade it. We'll get to some of these other markets as well. Shout out to Coach Hoop also calling out that we actually did have some markets go limit down. I believe it was hogs and cattle both went limit down today. If you rewatch Fast Markets, I don't know how often you guys rewatch episodes of Topstep TV. Maybe I'm a nerd and I do it sometimes, but we showed it was showing the DOM for cattle and hogs when it went limit down, so you guys can see what that looks like if you haven't seen it. We got some questions here, Coach. How much the Nasdaq has dropped during COVID? How much the Nasdaq dropped during COVID triggered a mass layoff? How does that compare to right now?
Not different, because that mass layoffs were because
World
of
shutting down.
the world shutting down.
Right.
That's a really good question. It's the United States changing the game.
Yep.
Literally, the rules have been changed.
Right.
They've been on set since for 80 years.
Different situation.
Uh,
Do the rules still apply though? Are you looking for 2-to-1 trades and try to purchase near anchored VWAP using micros? Yeah. So for me, I think we just said it right. Trying to get your entries as close as possible to VWAP. And would you still be looking for 2-to-1 here, Coach?
yeah, 2-to-ones are
It's a big
here.
ass
That's a
trade.
really good question. Except they're a little bigger.
Yeah. Yeah. Two ATRs, against volume here is 176 points. So let's just do this real quick. Let's say you sold it against that New York VWAP on this trend up. Your stop was 176 points. Coach Paul, your two ATR suggestion, even in this crazy time, and that's a lot of points, right? I'm not going to be naive to say it. So, can you trade this with minis? Probably not, because your account is probably blown somewhere right here before this pull up. And is this the greatest entry? That's left to be discussed. But do you get a 2-to-1? You do, and a two here, Coach. And we've said this a couple of times, where a 2-to-1 trade for your suggestion is never going to be a small trade.
No,
It's
but
350
it's
points.
reasonable. It
Right.
means it's reasonable that you can get that. And
Right.
by the way, that 2 ATR is a function of the volatility.
Hmm.
It's literally a function. It's inside of that calculation.
Right.
It's it's so that's why I'm preaching this, to
Hmm.
understand. And this, you're in it, you have different risk than you did a month ago, 2 weeks ago, even last week. It's dynamic. It changes day to day. Like I said, there's another one. If you're doing that, if you don't have the money in your account
Hmm.
to take it on,
Takes trade.
whether it's a micro, you might not be able to do it on a micro. Guess what you have to do? Don't take the trade. Maybe go find another place to trade.
Right.
I'm That's it. But if you can afford a 2-to-1, yeah, I'm always looking for that. But yeah, that's crazy. Well, you know what? In If you're taking a 10 tick stop, I you're gonna get stopped out.
As soon as you
Just
put the trade on.
it's the butterfly effect, right?
Right. As soon as you put the trade on, it's a loss if you're looking for 10 points. Unless you have daredevil type precision with your trade entries, uh, that's almost like an immediate stop out in this environment.
Yeah, 20. No, and it just go through it. So if it was 20, it probably gonna get stopped out. I mean, why? Because that's the market is moving that quickly.
Yep.
So it's it's a great point. And it goes back to the principles of consistent winners. Predefine the risk.
I I also think with how strong some of these rallies are, and how big the counter trend move has been, I don't know that it's like I said. This trade location is this good trade location or not? I mean, we could see that we could have gotten better, but you know, without cherry picking this, you could just wait for the market to start coming back down. Uh, Take the trade, right? Because there's so much
Yeah.
room available that you don't have to try to get the high tick of it. You could wait for the market to come back down and then get that confirmation that yeah, all right, we are going lower now. Um,
And coach, what's the blue line?
that is the full session VWAP.
Okay. Yeah,
That is full
that's the
session
full
VWAP.
session VWAP. That was the high of the move.
Right. So if you guys were watching the opening call this morning, right before we got off, I took a trade, and my entry was 18 to 13, short a couple micros. My stop was above 18,450, I think, on a one lot mini, risking about $400. Um, let's see. I think I was even more than two ATRs at that point, coach. And, that's a 3-to-1 trade. Um, And with the idea that if this overnight VWAP holds, I was willing to add to this trade. Um, so you know, there's opportunity here. Don't try to over leverage. You can actually really see the power of micros trading this market. Right? Is it U.S. trade expansion? Coach, I'm gonna have to throw that one to you.
Is it what U.S. trade
Yeah,
expansion?
that feels like an incomplete question. System Pro FX, if you can kind of add to that question a little bit. Do margin requirements get larger and larger? I mean, I know for me, for my broker, they doubled margin requirements during a time like this, and they sent maybe 6 emails today saying, "Hey, check your effing emails. Margin has doubled." So everybody better be aware. Yeah, I got a lot of emails from them today.
Okay, I'm still on this topic.
Go ahead.
Why did margins double?
They don't want to take that risk.
Because the volatility doubled.
Yep.
Margin is a function of volatility.
Hmm.
It's almost directly. It is. Period. So why it's great information. It means that there's pressure on the system.
Yep.
So if you're going to be in this is the industry standard. Been that way for 150, 175 years. There's a
Yeah.
reason for it. Like I said, if you go, you could trade corn. You could trade micro Bitcoin, or you could just not trade.
That's an option. That is an option. All right, let's talk about some of those other markets, Coach. We spent a lot of time on the
Yeah,
equities. Anything else you got on the equities before we move on to something else, or did we
I,
wax
I
poetic on
think
those?
yeah.
All right. Uh,
Did you say wax poetic?
yeah.
I haven't heard that since I had hair. I like that statement.
All right. Let's take a look at gold here, Coach. What are we looking at here on the daily?
The buying opportunity? Well, from a trend perspective, absolutely. Go right back to the 20.
Mhm.
I'm not just blindly going to buy it. I'm going to see if there is. Oh wow, look at that volume. Now that's
Yeah, that's what I
concerning.
was looking at. Yep, that's what I was just looking at. Concerning, but at the same time,
Reasonable, but still, that's definitely. I would look at open interest.
mhm.
If we see open interest go down, then that's definitely that would be concerning. But hey, it's done it before. Every time it does it, it's giving an opportunity to buy it. But if we're not position trading, just trying to frame out a place you can. To me, I'm looking for a place to see where selling has failed
Yep.
and go from there.
Coach, there's a good comment here from David B. That you mentioned something similar to this the last time we saw a move like this. Uh, David says gold selling doesn't make sense unless you look at liquidity issues. That could that be possibly what we might be seeing here,
Oh
where
yes,
we might be seeing some margin calls from. Go ahead,
it
Coach.
that moves like this affect
Everything.
all different markets. It's contagion. It's literally I used to call it. They still do. It's contagion.
Hmm.
All right, but some equity, private equity, or a hedge fund is using stocks as margin.
Right.
Look, this can happen, and so they're. I know. I got equity. I got all sorts of Tesla. Oh, you do?
Hmm.
Then it's being measured. Now Tesla's what fallen with 30, 40%.
Yeah, it's not
Okay,
looking great over there.
replace now you have to replace that value for margin or liquidate.
Right.
Oh wait, I got to do both. You know, this is where it compresses. This is why this is nature at work. Well, you don't have that. You need to get him. We saw that in copper. Was by the way, we got to go back to that. It was out of the dictionary. But okay, now you got to raise. You either have to put up cash or liquidate some other positions. Most likely liquidating winners to take some money to raise capital. That's what a contagion does. They might not want to, but hey, just get out of it. I don't know if it's, and this makes sense when equities fall the way they do, because those equities it can be used as margin or collateral, and God knows what's going on in private equity or some of the over the counter. If you remember 08, the mark to market. But that's the beauty of futures. You come with that, you need to come up with that money, or we are getting you out. You don't have a choice. You sign the papers. So that starts it over the industry or over the. You could have banks going that are long goal to go. Hey, just get out of that. We need money. Yeah, because this volatility spreads. Oh God, I don't know. Imagine
Yeah.
there's going to be a couple horror stories coming out.
I'm sure. I am sure. But yeah, maybe a buying opportunity here. You talked about the volume coach. We can see the two high volume candles on the daily. Just kind of zooming out and looking at a couple of other examples of these. Last time we kind of had them. This one we were under the 20 moving average, so we continued to sell. This one here, these two high volume candles, we held the low. So what I would be looking at is, does this low hold 30.32 or 30.33? Does this low hold? Do we test 3000s again or that 50-day moving average? The same way we see these on a shorter time frame, I'd be looking at, hey, high volume, is this exhaustion of these sellers? And they start to continue to buy it from here. But seems like, I mean, ton of opportunity in a bunch of different places. While we're here on the metals, there's copper. Uh, Whoever was short, they had the right idea, just didn't have enough margin to hold the trade. Uh, we talked about that liquidation move, and since that point,
Like it's still just I took a picture of that because
yeah,
that you don't see that kind of very often. But when it does, it's pretty special. Island, old-fashioned island top on contract highs. Wow.
20% sell, it's almost a 20% sell off. And we talked about this, right? When the day copper made that high, we talked about the potential for this to continue. And remember what we said, right? I don't, what day was that? That was March 26th, 2025. So if you want to go back and watch that at the buzzer from there, we talked about, is this convinced buying up here, or is this forced buying, right? This is exactly what forced buying looks like. And at this point, if the buying was forced, the market participants that are, maybe just swing trading this, do they have an incentive to continue higher if this liquidation move happens already, right? We would need to see some convinced buyers step in here, and they never did. This happens on shorter time frames. This happens on longer time frames, and this has been an area where historically copper gets up to these prices and sells off. It just did it really quick in this case.
It's almost like the bubble was popped with
Yep,
that little needle on the top, like
you're right.
deflated everything. Wow.
Uh,
And that's today's move?
this is today's
I
move
didn't even
here.
get a chance to I'm busy
There's
with
too much going on.
what percentage is that? Was it down 5%, 6%?
9.
9%. So okay, this goes back to
Biggest percentage mover of the day.
there's pressure on the system everywhere. That's why
Mm.
liquid. We talked about that. The copper and copper has what they call it has a nickname, Doctor Copper.
Mm.
Um, how copper goes, the economy goes.
Right. We got a question here, real quick question from System Pro FX. Is a 75% strike rate consistent? Uh, you could keep that consistent, but a lot of times, high strike rates, what we see from traders is, you know, trying to keep such a high win rate can result in big losing days, right? So just be aware of that, right? But if you can make it work from a risk to reward and percentage basis, make it work. All right. Couple other questions here. One from Sunfrost, coach, and I want to throw this one to you. What do you make of the disconnect between the equities and Bitcoin over the past few days? Historically, Bitcoin would be crashing with the Nasdaq, but today there's a huge divergence. We talked about this one a little bit as well. Uh, what are we seeing in this Bitcoin chart, coach? I'm on a daily.
It's the most. Maybe we should rename it stable coin.
Right.
That's a brilliant. And I saw that. I was stunned. I'm like, it's basically unchanged.
Hasn't moved.
Is it serving its? So my question is, it seems to be serving its function. Now we talk about it acts like a stock, but this is not. It's diverged. It's become more stable.
Mhm.
So I had thoughts. I mean, just thoughts. Two things. It's world. It's a worldwide asset. We have hodlers there,
Yeah.
but they're not liquidating.
Mm.
But we're sitting on the precipice every day. This could be one where, okay, get rid of the Bitcoin too, because you need
Yeah,
to
if you
raise
sold everything
cash.
else, right?
God knows what happens over this weekend. There could be an attack. I would mean attack. There could be a bear selling attack over the weekend because futures are closed.
Right.
I don't know that it's sitting there, but yeah, I was impressed by it. But on the other side, it isn't rallying, but it just look at it, the
It's holding there.
the volatility is collapsing. Now,
Interesting.
the last thing is this weekend is really important for that. What is Bitcoin famous? Well, it almost has to because it doesn't. The futures don't trade over the weekend, so we usually
Yep.
gap. But I was impressed.
Yeah. All right. Couple quick things we'll go over. Something we missed on the equities. That death cross that Coach Vince had mentioned
Oh yeah,
early this week happened. 50 moving average is under the 200. The last time this happened was 2022. 2849 for the 50 moving average. The 200 moving average is at 20,903. So that is official. We already talked about the Nasdaq being in a bear market. So going to do some rapid fire here. Same thing in the S&Ps. We got the cross. So you'll probably hear this on Bloomberg, CNBC as well. But we got that cross on the S&Ps also. I do want to get to some currencies, coach. We got about 10 minutes left, or we can extend it, but it is Friday and the weather's kind of nice. Coach Hoop talked about the limit down in the hogs. I saw Coach Hoop talk about, how these tariffs are affecting literally everything, the agriculture products as well. Um, if you can't deal with the volatility of the equities, even if you're trading micros, this cattle short is a nice trade as well, right? On this opening range break here, risking the high of this opening range was about $800, right? This was about an $800 trade, which can be expensive, right? The one thing about there's no mini cows, micro cows that we can trade, coach. Uh,
there
so
should be.
there should be, but there was opportunity in a bunch of different places until we got to limit down in this market here. Uh, but about an $800 risk. I think some of us are risking that, trying to have a 20 tick stop on the Nasdaq with a couple contracts. But this is a market where we don't have as violent of corrective moves. Uh, so there's opportunity here as well. Again, you do not have to trade the equities. Literally every market is moving right. There isn't a market that's staying still, coach, that I
Except
can
for
see,
Bitcoin.
except for Bitcoin. Yeah, Bitcoin's the only thing that's staying still right now. Here's hogs, same technical trade. It's moving, and it's not the volatility has increased even here, but it's not at historical levels, right? It's increasing, so you still have to manage your risk, but it's not at the level of the equities right now, which has the major focus of the entire world, right? So you can trade other products. Speaking of which, are there any other products that you want to talk about, Coach?
Euro currency.
Let's take a look at the
We know
euros.
about the yen. Yeah, but something. Um,
Here it is on the daily.
we had this sharp run up, dollar weakening. Um, but the 20 is over the 200. It's gaining momentum. It's staying for a time above it. The overall background is a weaker dollar. Um, and we had a dramatic, we talked about the yen. This was the euro currency yesterday was up 250 points. It was a huge, huge move. Looks very friendly. I'm looking to buy a dip in there also. Dollar weakening. Let's look at the yen.
Similar
Much the
chart.
same.
Yep. Looks like, oh, here's the 10-year. We talked
Oh,
about getting above that 200 moving average.
yep. Now, we haven't talked enough about, the treasuries is the other side of this trade of equities.
Yep.
Two things, the plan is that with tariffs, that money goes where? It's going to get collected before it goes into the country. It's a tax. That tax goes where? Audience, I'll let you give you 10 seconds here. So it's collected where does by the company,
Mhm.
and they have to give it to the treasury.
Okay.
The money goes into the government coffers.
Hmm.
So it's it's a plus. It could be a big plus. That's part of bringing the debt down. That's part of the so-called tariff plan.
Okay.
So look at 10-year and look at the yen and the euro. They're all tied. It's financial. It's a basis of interest rates. It's a arbitrage, um, cost of carry. They all look the same, but they're all violently moving. So this is if it's moving that violently, it's larger entities scrambling.
Hmm.
That's why I think this is a almost historic kind of change. It's not like sudden, like you talked. This has just been by program, like constant.
Yep.
But in the yen, the dollar is weakening, but the treasuries are rallying. That money from tariffs, who pays that?
We do.
So yeah, we the citizens, unless you get a pardon. I haven't gotten that pardon letter yet or email. You're going to pay it in higher prices. Maybe some companies will be so generous and say, don't worry, we'll cover that. Oh, 30%? You're going to cover that. This is why equities are panicking. Like
There was a company that said they were going to cover it. I saw it.
Toyota, I think it was.
I wasn't thinking Toyota. MP retweeted them on his it was In-N-Out Burger. Any newly imposed tariff will not affect prices at In-N-Out since none of the company's ingredients are imported. Well, there you go. It's because
Isn't that
the
oh,
tariffs don't
isn't
affect
that
them.
nice?
Right. Your burgers at In-N-Out are going to be the same price.
And we won't charge that tariff here at Topstep either.
Yep.
So anyway, that money goes from us into that's why it's a tax. Someone's going to pay it. That money is going to go right into the treasury. Thus, we saw this huge rally in treasuries. That's a burden for who? Consumers and consumer stocks.
We got a question here, a couple questions here. Edward, for the just tuning in, confused about the email I received last night. If we're in an Express account, that means any futures ticker or commodities. Okay, so if you read through that email and on the website, that the limit downs are mostly for the equity markets, right? Just read through that email. It tells you exactly what markets are affected. But if any of the equity markets, which is what most of our traders are trading here, if any of those equity markets are down 5% and you're in a XFA or live funded account, you need to be out of those positions. With the commodities and currencies, it's a little different, but it's mentioned in that email as well. So just make sure you read through the website, right? I could piecemeal kind of quote it, but it's written out, word by word exactly what the process is. But the idea is, if any of those markets are near those limits, you have to be out of your position. All right. And some of the other markets are dynamic. So JT Irby had a question. Regardless of the tariffs, etc., zooming out to the weekly and monthly, isn't this just a much needed correction? What do you guys think? Did we need one? Probably. Did it need to be this big and potential to continue? I don't know.
Well, let's look at the other corrections.
Well, here's 2022. This was
All right.
about 34%.
In how many days?
This took, let's go from this high up here down to this low, 335 days.
A year. For how
Yep,
much percentage?
35.
Okay, let's look at this current.
Go from, let's keep it fair, because I didn't go to the
All right.
lower high. I went to this one,
Yeah, the all-time high.
all
We'll
time
put the
high.
fairness.
23% in 112 days.
3 months, a quarter of the time.
Right.
And it's really important. It's the trajectory. Which was another word for volatility. That's why it's different. Yeah, could be a good dip to buy. You're right, but we won't know that to the future.
So it starts going
Uh,
up again.
let's say we go a 50% correction from all-time high to zero. Well, it's down about what, 12?
That would put us about 50% correct. Jesus. Yeah, we're talking about like 1100,
Yeah,
11,000 handle in
yeah.
the Nasdaq.
It's only 6,000 points away.
Yeah, it sounds like a lot, but it's really not.
So, but here, it's that sharpness of time. It's hard to recover. It's a shock to the system.
Hmm.
It's different. Everybody's, how many people own stock 401k? How many banks? How many funds? It's a shock to the system. That's the problem.
Yep.
Like, if it doesn't matter if you're 35 and you have a couple 100,000 in a 401k and you're letting it grow. But if you're using it, you're leveraging like companies leveraging stock buybacks, leveraging their equity value for other loans. And it comes this quick. It's a literal shock to the system. Where I'm going to say next week and next couple of weeks, we're going to find out, as Warren Buffett likes to say, you'll find out who is swimming without trunks when the tide goes out. When the tide's going out, this is where you start hearing headlines of companies that were over leveraged or hiding something. It happens every time. But this swift of a move, that's a shock that reverberates, and that's when you start seeing We didn't see signs of that. That's why you don't, just like in trading, you don't want to be over leveraged. It's great while the plane is flying without any buffering. So anyway, that's a great question. You're right. But it's not there yet.
All right. Most important comment. JLM JL McCauley. JL McCauley did whatever we asked everyone to do all the time. Push that like button. Apparently, we only got 92. I'm not counting likes, but if you can, if you like what you heard, I see some comments in the chat. Shout out to Faye. I saw your comment saying that logical dialogue, all facts, not fluff or emotion. I love it here. It's what we try what we try to do.
No,
Glad that you guys appreciate it.
thank you.
Glad that we have almost 700 people hanging out with us on a Friday afternoon, evening, night, depending on where you are in the world. And if you can, for us, hit that like button. We're probably going to get out of here soon. Coach, any words that you have
Yeah.
going into the weekend, going into next week?
Get some rest. If you've been trading all week, I am.
Oh yeah,
I'm sleep deprived at this moment. I don't regret it. This is 1% of the time where I get but you have to rest.
Yeah.
Get your mind off, touch some grass, get your mind off the market, review your trades for an hour or two this weekend, enjoy your life, and come back rested for Monday.
100%. I think Coach Hoop is still doing his class in Discord in about 10 minutes from now. I like you said, Coach. I agree with you. I'm shutting down the charts. I'm not looking at a chart until the Sunday kickoff on Sunday. I will be doing the market kickoff again. If you guys watched last Sunday's kickoff, what we talked about happened. We filled. Remember what the Sunday kickoff we talked about, right? If the market trades inside of this August 5th candle, do we see the other side of it? Mission accomplished. We'll see what the mission is for next week on Sunday night. Thank you, everyone. Thank you for joining. Coach Paul, thank you as always. Andrew, thank you for helping us run this session like you always do. And to our chat, to our audience, thank you for joining us each and every day. We can't do it without you as well, so we appreciate you. Have a great weekend, everybody. Enjoy your weekend. Go do something fun, and we'll talk to you then. Thanks, Coach.
Thank you.
Bye.
Bye.